Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, October 3rd, 2016. This video, I want to take a look at the small caps and the microcap stocks, primarily the microcaps. I'm seeing some opportunities setting up there. As I mentioned in my nightly update last night, I have an ever-growing watch list right now. A lot of trade ideas, both long and shorts. And I've made mention that the swing trading, for the most part, has been very frustrating lately. My saving grace personally, and a lot of the trade ideas on the site, unfortunately, a lot of those were unofficial trade ideas. Many of those posted within the trading room have been these what we call nano cap companies. A lot of those penny stocks. The cannabis sector, for example, we've had explosive gains. Just about every trade setup there mentioned has panned out, for gains of 20 to 100% or more. But and the reason is, as I've stated, they have absolutely no correlation to the broad market. And the broad market, as I've mentioned recently, has been frustrating lately. We've been in this trading range. We'll look at the S&P 500 here. Okay, that's a weekly chart. Let's go down to my 60-minute chart. The same story. I don't want to, harp on the same thing over and over again. But if you're new to the site, this is what's been going on. We've had a trading range for nearly 3 months now. This sideways trading range, very tight. It's bound by I think no more, just over 3% between top to bottom. So you're talking from the midpoint about 1.5% up, 1.5% down or so. And within there, I've also mentioned there's really smaller or sub ranges within the larger range, and that was pointed out Friday before the close. This purple line at 2017.07 is what I call the midpoint of the range. It might not be exactly in the middle, but it's whereas you can see here, you have reactions once prices get above, they tend to stay above. The bottom of that range, or that 217 line, acts as support or resistance when tested from above or below, as it's been here. So Friday we had that nice the market rally right before the close, and pointed out we were heading to that level. There's 217.07. So you can see right after that, we had this little brief spike. It looked like a little stop clearing run or whatever went on there, one little buy order that popped us above that level for just a second, really. This is 1 minute candlesticks on this chart. Came back tested it, and boom, sold hard before the close. That helped confirm my suspicions we might get a gap down today. Trying to see the traders exit. It's trading 101. You buy breaks above resistance, or you short a run up into resistance. And so, that provided a decent shorting op, at least for a quick trader. Remember, swing trading, until we have a definitive break above or below this range, is likely to prove frustrating. And as I said, that will not last forever. I'll be honest, I'm surprised it's lasted this long. This is one of the longest standing trading ranges. It's such a tight range, and that's evidenced by the Bollinger Bands and everything else I showed you on the weekly contractions for the Bollinger Bands. And you can just eyeball it, eyeball a chart long term. So sooner than later, we'll have a definitive break, meaning an impulsive break that doesn't last just a day or so. Essentially what happened, we had the breakdown. I should clarify if I'm not being clear. This was the trading range. It was an extremely tight trading range. And then we did break down below that trading range. But what that did is just set up a larger, this has now been, we had multiple tags of that 212.68, which I believe I already had before we broke down as the first support level below there. So that's really now the bottom of the trading range, and there's also some activity back here. So that's what we have to do now. We have to either break above the top in a definitive break. You want to see, prices stay up there more than a day or so, ideally on a volume expansion, impulsive price action, or a breakdown from the bottom. I still favor that, but as I've mentioned, when you have a tight trading range, here's a trend indicator, a 1333 EMA pair histogram. You have the RSI in the middle, whatever you use, whether it's stochastics, there's a gazillion one trend indicators. You can see the PPO here, which would look like the MACD, just hugging and dancing above and below the zero line. That means you have absolutely no predictive value as to where the market's going to go, at least on this time frame, the 60-minute time frame. And again, I've talked about that. So let's get away from this. That's more of a broad market thing. Be ready, and I will, as I said, I will start putting out official trade ideas, setups, that is, so they're ready to go. And I just want to kind of share my thought process as to where we're going right now. Quick overview. Here's the IWM. Right in the middle of its trading range, going back. IWM is the small cap stock ETF, and you can see maybe in a little at the upper end, but it also has this line here that sort of divides. You have these trends where prices trade below or above that line right there, that white line. All right, so what we're going to look at today are the the microcap stocks. For those of you not familiar, companies that trade publicly, any stocks that you buy or sell on the stock exchange are broken down into categories ranked on their size. And a market cap is just simply if you add up the value of all the shares of stock out there, that's your total market cap. So any companies that have a market cap of $200 billion or greater are referred to as mega caps. Those are your Apples, Googles, Microsoft, or I should say Alphabet, Microsoft, Apple, ExxonMobil. And then you have your big large cap companies. Those are 10 to 200 billion, would define a large cap. Mid caps are 2 to 10 billion. Small caps are 300 million to 2 billion, and that's IWM here, the Russell 2000. And then you have your micro caps, which are between 50 million to 300 million, which we're going to look at today. And then your nano caps, anything below 50 million. That would be the bulk of those, if not all of those recent marijuana cannabis stock trades that we've done. Those are all nano caps, and typically those are penny stocks, but not always. All right, so let's take a look at the wanted to look at the Microcap ETF, and that's Microcap IWC. All right, this is let's start out looking at a daily time frame here. This is what I'm looking at here. I see a pretty clean bearish rising wedge pattern defined by these two uptrend lines here. You can see divergence. The divergence isn't as steep on the indicators. There's the MACD. It is a slightly downward sloping line, and that catches all the peaks here on the MACD from here, all the recent highs, as well as the RSI making slightly lower highs, although prices are making considerably higher highs. It's a pretty steep rising wedge, in other words. Sometimes you have steep divergence on the indicators, not so much on price. Sometimes you see both. Either way, that's pretty bearish. There's also a pretty key level here around 76, 75, defined by these reaction highs back here. You can see numerous reaction highs all the way back here. You can see how prices danced around that level at that point. It was support when tested from above. Tried to get above there and failed. So either way, a pretty well-defined level, which we recently broke above. So on face value, and unless that level goes, this recent breakout is bullish. However, I'm looking at a potential fake out scenario or a false breakout, and especially if that coincides with this wedge, because what you would have here, you have this intersecting support. You have the 76, 75-ish level I just mentioned there, and you also have this uptrend line right here, which is the bottom of the wedge. So therefore, be on the lookout for a break below this pattern, both those levels. And, although I could mark some minor resistance levels along the way, I would say the first target, I'd say with a pretty good degree of confidence, is at, roughly $73 level, and probably get a reaction there if it plays out. And then ultimately, I could easily see the possibility of a move down to around that $69 level. So to give you more accurate targets, let me just put those levels up. 73.12. These aren't hard numbers, but they're rough numbers. 68.67. So there's the ETF, and I know some of you like to trade ETFs over individual stocks. Keep in mind, if you're trading microcaps, the smaller a company's capitalization is, as I mentioned earlier, the higher the risk is, and the higher return potential. It cuts both ways. These are the companies that it's not unusual to see 30, 40, 50% gains on your swing trades. Then again, if you're shooting for a return like that, you need to allow for a 8 to 10% or greater stop loss. Otherwise, you run a tight stop on these guys, 3-4%, you're likely to get chopped out in the day-to-day gyrations in those smaller companies. All right, all we're going to do now, I'll I'll run through this quickly because these aren't official trade ideas yet, but there are some things that stand out. I have the watch list. These are all the components of the IWC here, and I'm sorting these by market cap from largest to smallest. So the microcaps, like I said, everyone uses their own definition. I was reading the definition off in Investopedia. I can tell you those definitions I've read to you before are not concrete. Different sources might cite different things. Looks like the IWC, this Russell Microcap Index Fund, looks to me, at least if these numbers on TC2000 are right, the largest component in there is about a $1.3 billion market cap, and that contrasts with, I think I said 50 to 300 million is what was citing off one source, but you get the gist. It's just roughly, it has to do with the company's size. So, all right, we're going to go through these, and I'll click down just so you know I'm going in descending order because you want to stay away from the bottom tier. I'll flip this around real quick to show you what I'm talking about. At the low end, here's one that's only 530,000 market cap. And you can look at the candlesticks. That just shows there's virtually no volume in that stock. Very thinly traded when you see these erratic looking. They don't even resemble candlesticks because there's only a couple trades a day in some of these. You get down the line, the market cap gets a little bigger. You can see these candlesticks start to normalize, but these you have to treat extremely speculative, a lot like the cannabis stocks, and I don't see any. Of course, these aren't in any one sector. I'm okay with the cannabis stocks because I'm playing a momentum trend within a specific sector, and it's benefiting just about all those stocks. But all right, let's go into again back starting with the largest market cap, OCLR, and I don't really have a divergent high, maybe slight divergence if I drew it here at the peak. Very small. That would probably show through better on the 60-minute chart. You can see it there and there. A little bit of negative divergence right at the top. And just simply a trend line to watch. Pretty thin. See, once it had a breakout here, you can see it tested this level, several tests. This was your breakout point right here. And that was resistance and now becomes support, and I don't see a whole lot of support until that level. So I think there is a chance, and that level is at 565. So, there's a good shot if that one breaks that trend line, it's going to come back all the way into 565, especially if the broad market and the microcaps are selling down as well. And, that's a pretty decent move if it got down there. You're talking about a 34 or so % drop. All right, CHRS, I don't see much there. If I don't see a lot on a chart, I'm not going to really talk on it. MMSI, this is a pretty key level. There was a big gap there. There was a gap back here. It punched up through that level, made an impulsive breakout, had this uptrend line here, minor uptrend line, broke down below it, sort of limping along. MACD is still in bullish territory, but if it crosses down below, there's a good shot it moves back down to that level. And if that level fails, it's probably coming back down to about right here, 2058. AERI, sort of a choppy, messy chart. I try to stay away from charts like this. When I say choppy, messy, I'm referring to these gaps. The gaps are just crazy on this. Drug manufacturers, you don't know what's going on with this company. You have these gaps like this. These are unpredictable. Nobody can trade around those. You can't protect yourself against those. When you have large gaps like this, some of the gaps are down, some are up. All in all, for the last couple of years, this stock has traded nowhere but sideways. You can see it's trading today not far where it was a couple of years ago. These kind of stocks, stay away from. That's speculative. You might as well just go to Vegas and put all your money on red or black on the roulette wheel. All right, CWEI, Clayton Williams Energy. This is a downtrend line to keep an eye on. Let's color that. Pick a color that stands out. Here's your primary uptrend line. We have this little ascending price channel here. This would be a secondary uptrend line, which would be a target if that primary uptrend line breaks. I could see us coming down to there, and it has intersecting. We have some price support here as well, so that would be a target there around $60, $60.30 or so if that breaks. Some divergence in there as well. Not my favorite because this MACD is sort of flattened out. I like to see separation, between the two lines. In other words, a clearly higher peak and then followed by a lower peak. But with that being said, it is still divergence with the MACD making a lower high. So there's one possible short setup. STC, Stewart Info Corp, Stewart Info Services Corp. Looks like it's challenging this downtrend line or this uptrend line right now. There's that previous reaction high, which is always a significant level over here. Back there, that was a key high, and it's pretty much at dual support levels right now. There is some minor support below. You have these reactions here and these reactions back here. It needs to take that out, and if so, that would be a bearish event. HASI almost looks like a head and shoulders pattern. I'd have to slope a neckline here to catch that left shoulder more like this. You can see that there, and then it gives you a left shoulder right there, head, right shoulder. And what I like about it, head and shoulders or not, so far it appears so. You have some increase in volume on this right shoulder formation already. You have a volume increasing on the head. That's what you want to see. One of the things about a head and shoulders pattern, you want to see increased volume on the formation of the head, prices coming down, as well as off the right shoulder. And that seems to be the case so far. There's your downsloping neckline. And like I said, I like the fact that this one comes in. There's definitely horizontal support here around 22.24. You can see all these reactions back here, this reaction right here. And so, if we really take out that level right there, both that horizontal and the neckline, then that opens a door for a head and shoulders breakdown. And to show you what that would look like, or at least where the measurement would be, you just simply take the distance of the head down to the neckline, which I'm doing here, just a rough draw, made it a little bit long. You add that to the point where the head and shoulders breaks down, which would be about right here, and that gives your measured target. And that also comes in with some minor support right there. So, a lot of meat on the bone on these trades because they are microcaps. That'd be a 10% drop. MGNX, nothing much there. XNCR, another rising wedge pattern with these two white lines. I also have this yellow alternative uptrend line. I can draw either or. So when I have two trend lines or support levels in close proximity, I usually wait for the latter of the two to break just to be safe. And it's quite choppy, but what's nice about it, it's not so much gaps. It has a lot of well-defined levels. So this would be a magnet right here, 1995 as a price target. I see reaction here, reaction there with a little gap, reaction high, reaction there, etc., going all the way back. So I think if that either of those two, especially that white trend line breaks, and that that could bring you down about another 13 or so percent. Negative divergence in place as well. And I'm not sure how many more to go. I could sit here and go through every one on this list. I won't do it now. There's one that already broke down, hit support, bounced up. Not seeing an entry right now. HWAY, it's a little wedge / triangle pattern. Pretty well defined. A lot of reactions there. I think a breakdown there will backtest that previous reaction high. You can also see how that level has acted as support there. So that would be about a 10, roughly a 10% drop. If that level goes, you can see pretty nice support level here. There's a gap right here. So the bottom of that gap comes in with some price support back here. If things got really ugly, we could head all the way down here to this level, which, around the 1366 level. And again, like I mentioned, I like to scrub all these trade ideas, which I have not yet done. Scrub them with the weekly charts, even the 60-minute charts, to try to confirm a bullish or bearish case, with the long-term weekly charts. And then I like to use the 60-minute charts to hone down entries and exits. This one's trading really tight recently, and that doesn't mean anything, I don't think, as long as there's not talks of an acquisition. Usually you see prices flatten out, moving sideways. I don't think this one looks right. Again, I'd have to look into it first. By the way, nice divergence. If we make a bullish cross here on the MACD and then turn back down, that'll be a very steep negative divergence. So this is what I call unconfirmed divergence. Confirmed would be if we had a crossover, a bullish cross, and then prices turn back down. That would then give us a lower high, a lower peak. MNR, Monmouth Real Estate Investment Corp, negative divergence. Yep, divergent high. We haven't drawn it out yet. Like I said, a lot of these charts are rough. I just started going through these. and just want to kind of get these out to you guys to let you look and add any that you like. And then again, any that stand out to me, I'll add as official trade setups if and when if I fully vet the charts, on all the time frames. So that one, there's a story. You have an uptrend line, which would be your first sell signal. However, there's pretty decent support below, horizontal support. You can see price support at 13, I call it 1350 to be safe. And if 1350 goes, you have a thin zone to the left. I look at the volume at price histogram. That's these green and red bars. You can see how long they are here, how many there are here, but this in between, this is what I refer to as a thin zone. Meaning if that level gets taken out, then it's very likely to see a relatively quick move down between there. By relative, I mean very few, though of course there's always counter trend zigs and zags along the way, but I don't see a lot of support. Little bit here in the midpoint of that range, but I think that there'd be a good shot, especially if the market confirms a broad market. And it doesn't always have to. Remember, I'm doing this because these microcap stocks have a much lower correlation in the broad market. If you're shorting like, AVGO, I had some semiconductors recently, they're not going anywhere without the Qs for the most part. Sometimes they'll lead, and I can use that as a leading indicator if the semis roll over first, because tech leads, the semis lead the tech industry leads, is the NASDAQ for the most part. However, if the Qs rip, NDX, QQQs, rip up 10% or so, you're not going to see the semis drop by 10%. And that's because there are components in there. When the program buying hits, when the institutions are going long the Qs, everything gets bought. That money that goes into there is spread amongst the components. So they're going to go up and down along with the broad market. In other words, they have a very high correlation because they are the components of that index. Whereas these micro and nano cap stocks, they can often march to their own drumbeat, especially as I made the point with the cannabis stocks and some of those nano cap stocks, which have virtually no correlation because they are not held by institutions, or at least the vast majority aren't held by institutions. They're too small. They don't fit the criteria. They don't have the same reporting criteria that the listed stocks have. These are listed stocks, and some of these, like I'm showing you here, these are part of an ETF. Called the IWC, but it's not a very actively traded one. And again, it's not what you'll see a lot of large pension funds and corporations. And these aren't the stocks that the high frequency trading machines are really going after. They like stocks with liquidity. That's where they make their money. All right, let's see. I don't know how many more to cover. I'll just do a few more. I haven't even gotten to the charts at this point. TISI, I'm sorry. Could actually, that looks more bullish than bearish at this point. Quite a few levels. Seems to be, it's in an uptrend, making a series of higher lows and higher highs so far. Not my favorite, but not anything I'd see a short on. SGYP, there's a downtrend line. This stock stopped at resistance recently. You can see how it was support back here, and needs to take out that downtrend line. There's a little negative divergence. I haven't drawn it out here, but you can see it right here. Price is making a lower high on the MACD and RSI versus a higher high here in price. So there's your typical rising wedge pattern, and bullish near term if it can make a solid break above that level. This wedge certainly could have more to play out, but it could break at any time as well. And the fact that the stock is at resistance says it might. PATK, pretty nice support shelf right there at $58.92, so almost $59. Very thin between. Here's that thin zone I refer to, and these would be the levels. If that level goes, that call it 58.90, that one probably coming down to at least 51.11, and quite possibly, before all said and done, the 47.90 area. We'll stop here. We'll just randomly pick this one. Isle Capri Casinos. It looks like it has all the makings for a potential island cluster top. This is a casino stock. Here's broke out recently to new multi-year highs at least. You can see double top here, gapped above that level. So bullish. You don't want to touch it short. In fact, if you're a bull, you go long there. It took out those previous highs. However, you watch this one, if it fails that level, especially the ideal entry would be a gap down below that line right there, those previous highs. A gap down would then it would be two things. It would be a failure of that breakout to new highs, or a false breakout, aka bull trap, and it would also put in what's called an island cluster top. This being your island, an island of prices, and separated by a gap on both sides. So again, a gap below this line, this level here. In fact, I'll just set a price alert right now. And that would be an ideal entry. Those island cluster tops are very powerful reversal tops, and they're good for not just a quick swing trade, but usually a trend trade, a lasting reversal. And won't even bother giving targets on this one now, because if that does happen, I could tell you at minimum I'd be looking, well, I should say at minimum I'd be looking for a pullback to this level, 19, and then ideally would be at least this would be my preferred target, is what I like to call it. There could be more there, but right now I'll call it about 1650. Okay, this has been Randy Finney with Right Side of the Chart, and again, I'll start honing down the list. These were just the micro caps that I covered today. I do have stocks from all large, mid, small caps, all different sectors, and market's not there yet. We're still within the trading ranges on the broad market, but I want to get those out and so you guys have them ready to go if the fireworks do start. Okay, hope you enjoyed the video.